What's up, Banter fam? Welcome back to the show. I'm your host, Miles, and in today's show, I'm going to be running you guys through some altcoins that I am looking at buying at the moment and running you through a little bit of a buy list that I've got my eyes very closely on in this market. It's going to be a massive show. We're going to go through 4 of those altcoins. At the end, I'll be answering your questions. You can ask me about any altcoin that you want to know about, and I'll explain my thesis on those altcoins as well. So it's going to be a big show. Let's get straight into it. Now, we can see the Bitcoin price has been in this descending channel. Now, what Sheldon said on the show yesterday and what I also said is what we want to see is this push up from Bitcoin beyond this line. So it kind of looks like an inverse head and shoulders to the extent that if we do get the shoulders here, this obviously forms the head. Then we're looking for a push up into this 22,500 to 23K region before further downside, likely back to the 20K region. Now, what ended up happening overnight is the Bitcoin price didn't quite gain steam. So it bounced off this 50 EMA. It actually got rejected on our main line here, which opened up a shorting opportunity. So Sheldon posted on his Twitter that the short was live, and I also took the Sol short at the time, and we got some nice profits from that. But it wasn't that big move to the upside that we were looking for. What I personally was looking for to execute a big short instead of a scalp trade was this reclamation of the 22K region and pushing up higher towards the 23K mark. So this is still very much a possibility right now that we do get a push up to this point if we do break through resistance. But remember, we do have this 50 EMA, and we also have the main trend line here that we would need to break in order to form the top of the next shoulder. And obviously that would mean another leg down afterwards, which would present a decent shorting opportunity. So obviously it would look something like this. We'd get a push up to this region, and then we'd come back down, kind of test the 20K mark, and form that other shoulder as well. So that's kind of the pattern we were looking at. But obviously we got this key rejection in this area here, which kind of invalidated that in the short term. However, we have to keep our eyes very, very closely on the charts today to see if that can still play out. Because if we don't, if we don't successfully retest and reclaim this region, then it could open up for another shorting opportunity to the downside. But remember, that is on the short-term time frame. That is obviously a trader's mindset. And in today's video, I'm going to be taking a little bit of a step back and looking at the bigger picture. So I'm seeing a lot of people in the comments saying, Miles, Sheldon saying short, you and Rana saying buy. Like, I'm a little bit confused. What is actually the right thing to do at the moment? And I think the important thing to note is that trading only constitutes a specific portion of your portfolio. So the majority of my portfolio is actually in my long-term HODL DCA bags, which I'm accumulating throughout this bear market, and I'm setting myself up for the next cycle. What Sheldon's talking about in these shows and the trades that we talk about in the shows are more short-term trading opportunities that we're getting off the back of either the break of trend or major rejections, and we're trading those swings. So a little bit of a combination of both is what I implement into my overall strategy, in order to profit into this market. So a small percentage trading, you can pick 5-10%. I personally do sub 5%. I know some of you probably do more, but it's completely up to you. And then the large part of my portfolio is more geared towards the long-term DCAing. When I say long-term, I mean with a 1 year plus time horizon. And obviously, in the meantime, taking heavy profits and doing some swings on some of the altcoins. But what I want to talk about in today's video is my buy list, what I'm actually accumulating. Because I decided that when Bitcoin started to push down into the 20K region that I would start buying. And at around the 18K region, I started deploying quite heavily. So we see this major blue box. This was my deployment box because historically, this has been a level of support for Bitcoin that I'm very comfortable buying at. So if we do come back down into this box, I'll significantly ramp up my DCAs again. And then we do have one of the other key zones, which is obviously the 12 to 14K zone, which would be another very big buying zone. But I am actively DCAing because the thing is, you can't pick the bottoms in this market. You can't possibly pick the top, just as you can't possibly pick the bottom. So I'm not trying to time the market when it comes to these long-term purchases. The only key component of these purchases is is making sure that you're investing in projects that survive. Because the reality is that there will be many altcoins that don't survive in this market. Like we saw in 2017, there were altcoins that were super strong narratives that never reached their highs again in the 2021 cycle because there were new coins that came to fruition that just simply replaced them or had better tech or a stronger narrative. And so those 2017 coins, a lot of them never recovered to their highs. And we're going to see a similar thing now where 90% of altcoins, probably more, closer to 99% of altcoins, they will never reclaim those highs ever again. So we have to look for projects that have the runway, the backing, the community, and the tech that is superior enough to their competitors to succeed in the next cycle. So right now I'm starting with the safer projects, and then the lower the market goes, then I'll start to nibble at some of these mid to small cap projects. But I want to have a look at some of the ones that I'm actively buying at the moment and DCAing into, give you my DCA plan for those projects, obviously, and then also have a little bit of a chat about what I'm actually looking at, because, now's the time to actually start setting these watch lists. And, if you're comfortable, actually start deploying because, we're getting generational buying opportunities. Some coins that we're buying today or over the next few months, they're at significantly better risk reward levels than they were a few months ago. So I don't see any reason to shy away from the market just because there's a bit of red. But I also wouldn't use this pump as an excuse to FOMO in. That's not what I'm saying at all in today's video. Today's video is about how to set up your DCA plan in a pragmatic way. And obviously these short-term trades are great. The ones that Sheldon has been giving us, the ones that, I've been sharing on the show, on my Instagram as well. But, remember those are with a small percentage of our portfolio. So we don't contradict each other. I may have long positions and I might also be shorting at the same time on a shorter time frame. That doesn't mean that I'm selling my long-term bags. It's just kind of like a separate part of the portfolio. So I just wanted to make that clear in case anyone, was confused about that. Bitcoin dominance is the major talking point today. And it's been the major talking point for the past couple of weeks because, despite, a weak Bitcoin price over the last few weeks, we've seen this dominance really refusing to move. And even on the hourly, we only saw a slight uptick in the dominance. So from the bottom of this trend, if we move to the hourly time frame, we can see that Bitcoin is now starting to, the dominance is now starting to reclaim a little bit of strength. So if we draw in the trend line here, we can see that we are continuing upwards in an upwards fashion. And potentially, if Bitcoin if the dominance can break this line here, if we draw in another trend, we can see that there is a strong trend to the upside that's starting to form. If we did break this in the dominance, then that would be very positive for the Bitcoin price. So as a Bitcoin bull or, as a market fan in general, if you want to see higher prices, what you'll be wanting to see is us not breaking through the bottom of this trend. It's actually breaking through the top of this trend and Bitcoin starting to regain some steam, because we know that the Bitcoin dominance is indicative of overall market sentiment to an extent. So we want to see a strong Bitcoin dominance if we do want to push up to higher levels from Bitcoin, because these alts simply can't run without that rejection of injection of liquidity into the market. We can see that we're actually dropping below this trend right now. So we got to keep our eye on this. If we do break trend, obviously we do have the 42% level is a key point for Bitcoin dominance. This has been very, very strong support. And overall, if we go into the daily, we know that we're still in this massive range between these trends here. So very likely now we come down and test here before we push up again. But the Bitcoin dominance is definitely one to keep your eye on in the near future in order to see, how these alts are going to perform. All right, so that's kind of my little market update to begin with. And now it's time to get stuck into these alts because I got 4 altcoins for you guys that I'm accumulating. We're going to start very safe, and then I've got a couple slightly riskier picks, but today's video is going to give you a few altcoins to keep your eye on. And of course, there are some very degen plays underneath this if you're so inclined, but I'll also be kind of sharing my personal strategy when it comes to each of these altcoins. So let's get straight into it. This is live, guys. This is live right now. Look, it's 9:24 in Australia right now, which obviously means 8:24 or 7:24 in the US. So yeah, let's get straight into it. All right, Ethereum. This is the first altcoin I'm DCAing into. Now, when Bitcoin got down to those levels, down to the 18K, $17,800 levels, Ethereum was the one that I was primarily DCAing into. Now, obviously, it's not, the most exciting coin when it comes to upside potential because, it really only has it has a certain ceiling based on the Bitcoin price, right? Because Ethereum, until it truly flips Bitcoin, if it ever gets there, it's going to be hampered by the total market cap of crypto. So the thing with Ethereum is that it's a great risk reward play based on, the current levels that it's currently at. I think it's, sitting at $1,143. So historically, that's actually quite good levels to be getting involved. Now, it did go to $850. That was a great level to be DCAing into, but I don't see Ethereum as something like Bitcoin that we can really time the bottom on. So it's one that I'm continuing to accumulate, and it's constituting, the majority of my portfolio. The thing is with Ethereum is that, yes, you may not see those crazy gains that you'll see in the other alts, but it's very, very likely that it'll be around. It has the first mover advantage. It has the largest transaction volume, of any chain weighted against its gas fees. It has the most NFT volume, etc., and the most developers. So at the end of the day, when we're looking at kind of these safer L1 plays, having a bit of ETH makes sense. Now, I personally am stacking more ETH than I am Bitcoin. I personally think it has more upside. Now, I love Bitcoin, but I view it more as a store of value. My personal portfolio goals are geared towards wealth generation. I'm not 50 years old. I'm not looking to kind of save all my money. I'm younger, so I want to stay in the market. I want exposure to the market and its upside. And I think Ethereum gives me a good way to do that through a decent balance of risk reward. So I do like Ethereum as a play here, but I know all you guys know Ethereum anyway, so I won't harp on it about too much. But I just wanted to kind of run through ETH and, kind of talk about it a little bit. And we know that the merge is coming. So we know that we're going to see a significant decrease in the issuance and therefore the supply growth. So what will happen is Ethereum basically becomes deflationary. After the merge, we'll see a minus 0.4% supply growth for Ethereum. So obviously now we have a non-inflationary Ethereum, because at the moment, if we look at CoinGecko, we can see that the total and the max supply is technically infinite, because they're continuing to distribute rewards. They're continuing to emit Ethereum tokens, which obviously leads to an increased supply over time. Whereas once the merge comes to fruition, we're going to see this supply growth start to decrease. So this is one of these catalysts that's on the horizon for the end of the year that will increase, obviously, the amount Ethereum can potentially grow, because it doesn't have that inflationary aspect hampering its price potential. Obviously, the OpenSea volume is still the number one market in crypto by almost a 4x on Solana now. So we know Solana was flipping Ethereum at one point for OpenSea volume or NFT volume, but now we can see Ethereum is now largely ahead in that category, actually with less transactions, but more in sales, because it has, those big hitter blue chip projects underneath it. And I did this tweet yesterday. This is the crazy part. The gas fees right now are so cheap. It's like a $2 gas fee to transfer USDT on Ethereum. And if you guys remember last year during the peak of kind of the bull run, those same swaps were like $200, $300. So the fact they're $2 right now is just crazy. And you can actually swap tokens on Uniswap for like $5, $6, $7, which is very, very, very cheap. So the transfers on ETH are cheap. Gas will only get cheaper with the merge. So that's a bullish catalyst for ETH. And I really, really like that as a play. At the end of the show, I am going to be going through some of your altcoins as well, and answering some of your questions and kind of going through some of the projects that you're looking at, and yeah, kind of answering your questions based on that. All right, the next one I want to go through is one that I've had my eye on for quite some time, but now I'm actually starting to really ramp up my DCAs into it. This is a project that I think long-term is going to be held in very good stead to start competing with some of these other L1s. Now, I've talked about it quite a bit, but for you guys that haven't, heard me talk about it on the show before, it's one that's worthwhile revisiting and one I'll be talking about quite a lot in the future, and that is Near Protocol. Now, Near Protocol is very, very, very interesting. They've got similar tech to Solana, but with a few major changes. So the way the Near Protocol network scales is through sharding. So that's actually a feature implementation that Ethereum is rolling out in roughly 2023 or 2024, so in a couple of years' time. But Near Protocol has it today, and right now it does remain one of the most scalable blockchains on the market. You probably will be hard-pressed to find a more scalable blockchain in the short term before some of these upgrades for these other chains come through. And Near is one of my favorite tokens for that reason. Now, the other thing that's very interesting about NEA is that its circulating supply is not crazy. It's like 72% of the total supply. We are going to get another 28% dilution. But the thing with NEA is that you're not buying into these crazy unlocks. Now, something like a Moonbeam, which I do like as an L1, you're still going to get those crazy unlocks coming in, which is obviously going to make it harder to accumulate. Whereas the thing with NEA is that, we're starting to get to better levels in terms of unlocks. Now, you can use unlock calendar and Masari to kind of dictate when these unlocks come to play, and you want to keep a close eye on that because potentially if something like a 3AC was liquidating tokens, then it would be advantageous to have those unlocks on the horizon. But NEA protocol is one I definitely like, and at a $2.5 billion market cap, of course it can go way lower in a bear market. I'm not remiss of the fact that if we get a 15k Bitcoin, you guys have seen my charts, I'm not discounting a 12 to 14k Bitcoin by any means, but NEA is one that I'll be DCAing throughout this period. And you have to remember that these DCAs are happen periodically. You want to do them maybe once a month, maybe once a week, maybe when the market is more red, you want to ramp them up. It all depends on your temperament and the strategy you want to implement. The strategy I implement is, I have my weekly buys that are set with, percentage weightings, largely further geared towards something, like an Ethereum. And then the altcoins, I put slightly less into, obviously, because they're riskier. And then I DCA weekly. And then I also, on extremely red days, so when this market was wicking down to the bottom of this blue box, that's when I started to ramp up my buys a little bit. So it's not linear. I definitely DCA more when the market's down. And when we get these pumps, I DCA less. So technically I am buying now, but I'm buying less at these levels than I would have been at these levels, because you kind of want to adjust your DCAs based on what the market is actually doing. NEA absolutely won't get you wrecked chinos, or at least I don't think it will, because it has the most backers of any coin. Now, we know how important backers are in terms of having quality VCs coming in and actually underpinning the growth. We know that in order to get development on chain and to incentivize development, we need funding. Now, you'll be hard pressed to find a project with more backers than NEA. It's got A16, a venture capital firm by Mark Andreessen that I believe will be probably one of the biggest VCs in crypto in a couple of years. We've got Coinbase, Pantera, Electric Capital. 3AC did invest in NEA, but they aren't a primary backer as far as my research is concerned. They did have some holdings though. Obviously, we've got Amplify, Metastable, Multicoin, some massive VCs that are actually backing NEA. Now, this is what gives me a lot of belief that, they've got the backing. And, I do like its tech, as kind of like an alternative to a Solana. And if we look at the market cap comparison here, it's not that crazy. And that, a 5x away from Sol, I think puts NEA in a decent position because it has that upside potential. With the overall market growth in the next cycle, it has that upside, and also it has upside against its companions, like Solana as well, which gives it, just an extra little bit of kick of growth, to potentially perform well next cycle. I do like NEA very, very well. Someone asked, if you DCA every week, how do you get to the money to DCA without selling? So there's a couple ways I do this. I have capital that comes in from my other businesses and from my income, which is off the side. A percentage of that is allocated to crypto, and a percentage of that is allocated to Ethereum, Bitcoin, and then a smaller percentage, probably 30% right now, maybe 40% at max, will go to the L1 altcoins. So income from outside crypto is one way I do it. And then another way I do it is through the trading. So by using that very, very small percentage of my portfolio, I gear that towards trading. And that very small percentage keeps the dollars ticking over. For example, I did a long on Phantom yesterday, made a few hundred, made 1,000 on Bitcoin the day before. Like, just take these little scalps. If I can take 5,000 to 500 to $1,000 a day, like, that's a very good day on the short-term trading front. That just gives you a bit of extra dry powder to continue to DCA. But that's a very small percentage, of my portfolio. And I do reserve some of the bigger trades that I do for like very sure moves. Because at the moment, you'll notice a lot of the trades we've been taking, they're kind of scalpy. We don't have very, very clear direction. Like, once we have confirmation of a potential, rally up to 23, then we'd be taking much, much bigger longs. Or if we had a major rejection and we knew we're coming down, then, we'd take much bigger shorts. But the thing is, the market is very, very choppy right now. So we need to let it do its thing. So in the short term, the trading is more geared towards, the short term scalp trades kind of thing. And yeah, someone said money from sponsors, BYBIT, etc. BYBIT is one way we fund the channel. I want to be totally transparent about that. Obviously, we need to pay the bills, the production costs, and also, we need to fund the channel. So BYBIT is one way that we monetize because we don't shield projects. We don't get paid to talk about projects. We don't get paid to promote projects. We're not like those other channels. Every coin I mentioned on this list, I'm not paid to talk about, and I personally believe in, and that's why I talk about them. It's a reflection of what my personal beliefs. So BYBIT is one way that we can give back to the community through giveaways, and obviously fund the channel at the exact same time. So of course we get a percentage of the trading fees. Like, I want to be transparent about that, but at the same time, we give back to the community, and we do the giveaways through BYBIT. So I think it's personally a partnership that benefits both of us, and I want to be transparent because you guys see us promoting BYBIT, and of course, you should know that. All right, the next one I want to talk about, obviously before we get into that, you can sign up for a link, a BYBIT account, because we are doing the whale games. So the whale games is this kind of game show that we're doing, and what the game show is essentially we're going to be giving away, I think, $1,500 per show, and we go live randomly and we do giveaways. So if you want to sign up, you can sign up for a link in the description. You will need an account to get involved in the whale games, and there are sign up bonuses up to $4,200 if you deposit, and also you do need an account to get involved with potentially winning money on these games. These games are meant to be fun. They're meant to give away back to the community. So yeah, sign up for a link in the description. Make sure you get involved if you want to trade. And as I said, we've set it up so we can give bonuses back to you guys, and benefit both of us essentially. All right. Next coin. Big coin that I'm DCAing into. Not Bitcoin, but big coin, because I really, really like this next project. And it's a project I've been talking about for a while, but it's one that really didn't have a chance to flourish in the last bull run. And this narrative didn't really come to fruition. And that's obviously Polkadot. Now, it's a project that last bull run, the bull run was really focused around the primary L1s, and it was focused on these kind of L1s that can subsidize and take pressure off Ethereum, and interoperability really wasn't a narrative that popped off. Now, my personal belief is the reason why it didn't is because Polkadot didn't really have its launch timed very well in the scheme of the entire market. So we had that massive rally in 2021, but what we didn't get from DOT is we didn't get the parachains going live quick enough to be able to take advantage of that rally, and we didn't get the rally quick enough from DOT's perspective to be able to take advantage of the momentum. Now, of course, it did still rally massively. It still went, to the $54 region. It still did massive things, but it really hampered its ability to become like a top 2, top 3 project. Now, I personally believe this is also due to the fact that the UI on DOT wasn't great. The wallets, the interoperability, there wasn't EVM chains. It was just a very clunky network, and to an extent, it still is clunky. But the reason why I like DOT as a DCA is because, one, it has the interoperability narrative, which I think will be big in the next cycle. 2, it's basically fully diluted, so there'll be no real unlocks that'll dump on your head and potentially hamper its tokenomics. 3, its market cap has now come down to a level where it looks much better from a risk reward perspective. It's 8.99 billion, which is better risk reward than what it was previously, like 40, 50 billion, etc. So I do like Polkadot as a play as well. So the circulating supply is 1.1 and 1.2. Someone said, stop saying it's very distracting. I will stop doing that right now. So Polkadot is a play that I really, really like for that reason. The market cap is 9 billion, and I think it will be a good play in the next cycle. And one of the major reasons I think it'll be a good play in the next cycle is because someone said back shilling. Nice. I don't shill anything, guys. I don't shill anything because the fact is I barely even own any DOT. I'm not paid by DOT. And there's basically no incentive for me to promote these tokens apart from the fact that I think I could make you money. Now, why would I promote something I didn't think I could make you money in? We want to grow as a community. So it's not a shill at all. I literally barely own any DOT. In fact, I'm front running myself, but that's the whole point of being open on the channel. The channel is a documentation of my trading experience and then also trying to help you guys based on my research, right? So, you can take it for what it is, but I'm just trying to help you guys out on the show. Polkadot is the most commonly held asset by crypto hedge funds in Q3, And it still is to this date. So if we look at the updated figures, Polkadot is actually the top owned asset in all of crypto by VCs. So we see the major funds are actually backing DOT. And we've also said we should be following the smart money in crypto. That's one of the major strategies that you can implement to make money in crypto. It's following what the funds are doing. Now, we have a Messari portfolio tracker. We're subscribed to Messari. And what we do is we look at the VCs and we look at what they're investing in, because that gives us a good indication of where the smart money is deploying. And Polkadot is definitely one of those projects where the smart money is deploying. And there's no surprise that 2 of the projects on this list so far are the ones that are the top 2 owned assets by VCs. Very important stat I think a lot of people underlook. The other kind of cool thing about this stat is that this is based on the number of firms that own it. It's not based on the dollar amount. So if the dollar amount, if it was based on the dollar amount of people that own Polkadot, then obviously that would skew the figures, because it would rely on the people that bought in at the ICO prices, and it would kind of skew it by numbers. But this is actually by the number of firms. So this is the diversity. And I think the reason DOT's number 1 is because a lot of people see it as kind of a safe play, because it operates as an L0, so it doesn't have, it kind of has an economic mode in the sense that there's not a lot of other projects doing what DOT's doing, and at the same time, it's considered an asset that has that upside. And a lot of these firms are also invested in the parachain auctions as well, and they locked up their DOT for that reason. Now, the reason they've done this, and the reason why I'm personally investing in DOT, is because Polkadot is actually one of the top ecosystems in terms of total developers. So we have DOT at around 1,400 total developers, which puts it number 2 to Ethereum, which is at 3,800 developers. Now, often when we see development come in for a chain, that's a major indicator of growth, because in order to facilitate amazing dApps, amazing UIs actually created on chain, having the developers coming in and underpinning that means we can create better dApps. And the better the dApps that we can create, the more users a chain obviously can accrue. Because if it can accrue more users, then that leads to higher transaction volume, which obviously ends up reflecting in the price later down the track. That's kind of how the flow on funds works, right? So having DOT come in at the 1,400 region in terms of total developers means that it is one of the protocols that's well set for development on chain to perform really well. And that's exactly why I'm investing in it, because it has this total developer count that's very, very strong and will allow it to perform well in the future from the perspective of having great dApps, etc. So obviously this isn't the be-all and end-all of a chain. Obviously having a large developer count doesn't necessarily mean a chain will succeed, but it does give us a better indicator into potentially where capital is flowing. And obviously, like NIA, having these backers, DOT is very similar. It has some very, very, very big backers, which help underpin the chain as well. So DOT is another one that's on my list. And you'll notice this list isn't super degen, because right now I'm not going super degen. I don't see any reason to start risking it for the biscuit in this market, because we potentially have a lot further downside. I personally think we're going to see these lows again very soon. I honestly believe that. So why would I go crazy DCAing into small caps when we're likely going to get the same prices, if not cheaper, in the future? So yes, I am DCAing and primarily into these safer L1s, because I see that them as a much better risk reward play, but I'm not going crazy on these smaller cap alts just yet, because I just don't see the need to. So for something like a DOT, obviously you've got your Moonbeams, you've got your Moon Rivers under Kusama. For NIA, you've got Ref Finance. For Ethereum, you've got these L2s. So I could name many, many, many smaller projects which I think can perform well off the back of these narratives, but they're not ones I'm DCAing crazily into. So if you guys want a crazy degen list, I'm afraid now's not the time, but now is the time to start DCAing into some of the L1s, potentially, if that's part of your strategy. You obviously have to work out what your strategy is in order to do that. So I've got one more altcoin that I want to share with you that I personally like. Now, this is going to be controversial. A lot of the comments might start going off, because this one has had a lot of controversy, but no, I will talk about it anyway. It's one that I'm investing in. And then after that, I'm going to take some community questions and just, hang out with you guys for like 10 minutes, answer some questions, and see what projects you guys are looking at, and I'll give you my opinions on them. So the first project that I want to talk about is Solana. Now, Solana, obviously, I did this massive thread which talked about my concerns with Solana, and I have big concerns. I do have massive, massive, massive concerns. And I think that it certainly does have a lot of headwinds in its way. But SBF did this tweet. Now, I did point out this tweet as potentially trying to save his bags during the Solana crash. But at the same time, it does have some validity. So I want to look at the other side of things now. And the other side of things is that Solana could potentially vanquish its validator issues and provide real solutions for the issues that it's currently facing. We did see a major upgrade. Now, I have this in my notes, so I'm going to see if I can get it up for you guys. Major upgrade. Is this the tweet? Yeah, CMS intern said he bought Sol, first liquid buy in almost a year. Highly recommend learning out the network stability rollout. Now, this is something not a lot of people are talking about, and it's actually the reason why the Sol price didn't face the fate that it could have after this Solend controversy broke. The reason it didn't face that fate is because in the back end, we are seeing some significant upgrades coming in, and the market seemingly likes these upgrades, and that's reflected on the charts. Now, this is the upgrade. It's a quick rollout, which is an upgrade to the consensus. It's the stability network rollout. What they're also doing is they're increasing the amount of fees for these larger whale transactions, which were being exploited because Solana's network was so cheap. The problem with having the network so cheap is that the whales could jump in and they could exploit the low gas fees by DDoSing over and over and over. And this led to a situation where Solana's tech being so good led to it failing. So essentially what they're doing is they're putting in budget fee prioritization. They're increasing prioritization fees for transactions with wallets, users, and bots. There's a lot of technical terms in here that you can look through and kind of break down, but they're the main key things that you need to know, that they are actively solving the issues when it comes to these DDoS attacks and the downtime that they've experienced. So I do think that potentially if these changes are a success, we could see some positive days for Sol yet to be ahead. And it's one I'm DCAing into because when things get smashed like this, when coins have a narrative that's so negative towards it, such public outcry, I think that is oftentimes a sign to add it to your DCA list. If we are trying to be contrary in this market and not just buy what's popular, then we have to buy things we have conviction in. I personally think Solana is gearing up to be that NFT gaming blockchain. That's kind of where its niche is, right? Its niche isn't this. Its niche isn't the same as Nia, although the tech's similar. The niche is more on the gaming side. I think Nia's more going for DeFi. We've got Polkadot, which is focusing on interoperability, focusing on security. They want to be the most secure network. Solana wants to be the fastest network, and the fastest network in the end is the best for NFTs and gaming, right? That's pretty much all that matters for NFTs and gaming. So, well, obviously uptime matters and all that stuff, which is why they're implementing fixes, but the main change that we're seeing, hopefully should help that. And the main thing that will set Solana up for success in this industry is the fast speeds, because that's what it excels at, being the fastest or one of the fastest blockchains. So we know that the NFT data is very strong. But I think what also has stayed strong despite having some temporary blips is the transfer volumes, because you can look at the daily transaction chart and say, oh my God, Sol, it did 20 million and then it dropped all the way down to 2 million, Sol's dying. But the thing is, a lot of this transfer volume is artificially pumped by like NFT mints and a lot of the NFT hype that we saw earlier in the year. I know when Solana NFTs went on OpenSea, we saw like a 10x from some of the major projects like Atadians and Quetzonkrek, and that's kind of a funny name, but a lot of these NFT projects. So having the transfer volume come down, although it looks scary, it actually is objectively still very high. So it did 7 million transfers yesterday. Now, if we look at Ethereum, it did roughly 1 million transfers. Phantom did 800. AVAX did like 300. Now, Solana doing 5 million is actually still a lot compared to these other chains. It just set a very high bar for itself. The network accounts are still growing quite nicely, although we have seen a major drop-off. The daily wallet accounts are still 456,000. Many accounts. Although, yes, we have seen a drop-off from 1.3 million. So the price drop is warranted in a way, but in another way, we're still seeing a very active chain. The chain is very active compared to many others, and that's one of the reasons why I'm investing in it, as well as I think the primary reason would be the fact that I do back the team to come up with fixes to the issues that Solana has experienced, and I think that it makes it a good play for the future because of the tech kind of lending itself well to gaming and NFTs. So these are some of the projects I'm looking at, some of the safer L1s. Now, there are many more, and that's what I want to discuss now because I know there's a lot of comments coming through listing projects and people want to talk about it. And remember, yes, Sol is still in testnet, still in beta. Sol kind of took the approach many other projects, took a different approach towards how they launch. So Solana kind of launched quickly. They wanted to launch in beta. They wanted to get out there, get the first mover advantage. Ethereum did a similar thing. It launched quickly and they kind of decided to correct course along the way. Polkadot launched slowly because they wanted to make sure the chain was, secure before they launched. They were very kind of set in their structure of how they'd roll out the parachain auctions. Cardano is taking the opposite approach. Basically, anytime Cardano launches something, it needs to be perfect or near perfect. They don't settle for second. They don't settle for third. Cardano wants to be very, very secure. So they are taking the long game, the long approach with their network upgrades. Now, this does two things. The first thing it does is it means other chains have a chance to kind of swoop in and gain network effect, because we know how important first mover is in crypto. Solana now has millions of wallets that are set up, and the fact is Cardano doesn't. So even though Cardano's tech may be a lot more secure when it launches, they missed out on that. But then the benefit of waiting, like a project like Cardano did, is the fact that when it launches, the tech will be more secure and it likely won't experience the downtime Sol's experience, the issues Ethereum's experience, and now it's having to pivot out of. So there are benefits and negatives, but the reason I have multiple L1s is because I can't pick the top L1. We don't know what the top L1 is going to be. So I want to spread myself across a few very strong narratives. Now, you'll notice from the coins I've spoken about today, they all attack very different segments of crypto. One's interoperability, one's NFTs and gaming, one's geared towards DeFi, one's very safe. So that they're all different kind of, they're on a different spectrum of L1s. And I think that's very important because we can't pick the top one, but what we can do is we can diversify across many, and build a nice diversified portfolio of assets. So now I want to answer your questions, go through some of the questions you guys may have about projects, and run through some questions here. So someone said no Phantom on your DCA list. It is on my DCA list. It's not as big as these projects. I don't want to go all at once. So what I don't want to do with my DCAs is do like 50 projects all at once and then get wrecked because the market drops back down to 12, 14. So I'm starting to go slow with my DCAs. And by going slow, I've got to pick the top projects first. So look a lot higher on the CoinGecko rankings and look at these top 20 projects before, I go crazy on some of the lower projects. And as it stands, Phantom is now the 70th ranked project, which puts it at a slightly higher risk level than the others, but it definitely is on my DCA list for the future. For sure, Spaceman, because, it's a project I really like and it's one that's on my list long term. Let's look at some other questions here. Uniswap launching on Moonbeam. That's pretty cool. Miles, you never talk about Elrond. It has sharding. It's secure, fast, cheap. Do you guys not like it? I actually don't have anything against Elrond. I think Elrond's tech is good. The problem I have, and this isn't necessarily an Elrond specific problem, it's just there's so many chains. There's so many amazing chains with amazing development. So you kind of have to pick and choose. I can't invest in Algorand, Monero, Cosmos, Elrond, VeChain, Hedera, Flow, or I'll go broke. Like, I can't invest in everything. So I have to be selective. Now, diversification is important, but you can't be diversified too much. So you can pick Elrond over Solana in your portfolio, and I would have no problem with that. Personally, I prefer Solana because, it has more developers. It's probably, obviously, Elrond's a lower market cap, but Solana has, in my opinion, more scalable tech, at least faster tech, of course, with more issues. Now, Elrond having the sharding, you could make the argument that it has great scalability, and I would tend to agree. Coming in at rank 41, it's not extremely cheap either. So then it just comes down to a question of risk reward at the end of the day. Like, you can invest in any project you like, but it's all risk reward because opportunity cost, like when you invest in one project, you're directly hampering your ability, or at least limiting your ability to invest a certain amount of capital in another project. So something like an Elrond, I personally don't have a problem with. It's just there's a million chains that are all secure, that are all fast, and you just got to take your pick, right? But if you like it, you like it. Where's Shiba Inu on your DCA list? This may funnily be a joke, but the thing about Shiba Inu is it actually probably will be something I buy at some point. Now, obviously, the market is super, super, overall, we're in a downtrend. We're probably going to go a lot lower. So it's not one that, I'm going to buy today by any means. But like from a SHIB perspective, the thing is when retail comes back in, this will pump. So there actually is a play here. Not now, I probably wouldn't buy it now, but there is a play here eventually when the market's low to actually get involved with some meme coins. And I think if you're not investing in meme coins, you might be missing out because, okay, it sounds crazy because the thing is we want to invest based on fundamentals. The future of crypto will be based on fundamentals. But when retail comes back into crypto, as much as we hate to say it, the meme coins will likely pump as much as we hate to say it. So the thing is, I probably will DCA like a tiny bit into SHIB at the very bottom. But like I'm going to be super selective with that entry. That's not one I buy now because that's very, very, very picky entry. Verasity I do like. Verasity is this project that I like. It's kind of esports entertainment, live streaming. It kind of comes under the gaming category. But it's got a slightly lower market cap than some of these bigger ones like Theta. So it's sitting at like 56 million, puts it at a slightly riskier realm. Also the circulating supply being 10 billion against 110 billion means it's still got a 10x dilution. The dilution worries me, although I know it's got a very long vesting and a mission schedule, which kind of makes me a little more comfortable in Veracity. This is one that's on my watch list. But similar to a lot of the projects you guys are mentioning, they're not ones I'm buying just because, you got to be selective now. You can't be DCAing to 20 projects right now. You got to pick like maybe 4 or 5 and just take it very, very slow because this market's got more downside. And the thing is, we don't want to like run ourselves out of capital too quick. So the Veracity is not what I'm investing in. Cruise and NO, I actually don't know about that. I don't know if you're saying no or NO, but I actually don't know anything about that. So I can't comment on that. Input on Coti. I do like Coti, but it kind of comes into this same category of like, there's a million payments facilitators in the market, or at least there's a million L1s that can do a similar thing. Coti's tech is good. I was an investor in Coti in the last bull run. It performed quite well. Obviously, it's built under the ADA ecosystem. I do like Coti, but it's another one of those ones. It's like it's in this low cap tier. It's like good to keep on your watch list, but you'd have to be very strong in the narrative to actually invest in this because of just its market capitalization versus the current risk of investing in those kind of projects. DCA equals dollar cost averaging. Yes, in case anyone didn't know that. And that's exactly what I'm doing. I'm not going to try and pick the bottom. You'll see a lot of traders trying to pick the bottom. I'm not interested in picking the bottom. I'm interested in getting good risk-reward historical entries. And that is the best I can do in this market to set myself up long-term for a great portfolio performance long-term. Now, yeah, Bitcoin can go lower. The altcoins can go down another 50%. I don't care because I'll just be buying all through that dip. In fact, if Bitcoin pumped to 30K tomorrow, I'd be upset. I'd probably be like crying because I want to see it lower levels. I want to accumulate. I really, really want a chance to accumulate these projects. And we're going to need lower levels to really ramp that up. But the title of the show is I'm buying altcoins now. And that is true because I am DCAing now. Wake up, DCA, repeat, rinse, repeat. What do you think of BSC? Interesting one, Grick. Because I actually like BSC. It's been a project that has shown great resilience. It does have that slight headwind of having that legal case potentially on the horizon. It was a probe. So what they're doing is they're investigating whether BNB was listed or deemed a security at the time of the launch. Now, that's not a full case yet. They're not in court or anything, but it's a probe. It's an investigation. Adds a little bit of drama to the BNB situation. I think it's a bit of a nothing burger though. I don't think it's huge news by any means, but BNB nonetheless is a project that has shown significant transaction volume. I think it does 5 million transactions a day versus some of these other chains. It obviously harnesses the power of Binance. You guys know Binance is now the biggest crypto exchange. And it is the exchange that seemingly is most well positioned to survive this bear market and come out ahead next to FTX. So when I look at exchanges and the future of exchanges, I kind of look at BNB and FTX as being those two plays. So if you're investing in BNB, I don't think that's a problem. I actually think that's probably good. I actually think it's a good DCA. Yeah, I actually really like that as a DCA. I don't have a problem with that at all. I can't argue, because I think BNB is such a massive player in the space now. Binance, we saw that they cut. They were actually hiring employees instead of cutting employees. They actually decreased their marketing spend for things like the Super Bowl and the soccer and stuff to actually hire more employees. So they're really focused right now. And CZ's kind of running the game with SBF, huh? SBF money print to go brrr. We actually did see SBF gave BlockFi a line of credit, $250 million line of credit last night. I did a tweet on this, which was kind of crazy. So they're kind of bailing out BlockFi, or if they're not bailing them out, they're at least lending support. So yeah, SBF and CZ are literally propping up this entire market right now. CRO, not a massive fan of CRO. I don't mind it. It's just like, once again, it's opportunity cost. I'd rather like a BNB to a CRO. Verasity, I already talked about it. It's okay. It's just kind of not at the market cap that I'm kind of looking at DCAing into right now. Epic crash is weeks away as the Fed will be raising rates to 0.75 basis points. 10K will be the bottom. So sorry. Hopefully this doesn't scare you guys too much. So Rene says the Fed's raising rates to 75 basis points. Yes, they probably are. The next hike will be likely 75 basis points. Could be 100. That would be bad for the markets. 75 is actually priced in, though. The market knows this. The market's not stupid. Everyone knows that 75 basis points is the next step. So I don't think that would be a catalyst to send the market to 10K, because the market knows. Now, the markets will price in these things months before they actually occur. So we don't trade based on Fed announcements unless they actually differ from the market expectation, which very well could happen. If we got a 50 BPS hike, that would be so bullish. If we got a 100 BPS hike, that would be bearish. 75 basis points, the market's not stupid. It's expecting that. VET is the answer. VET, I'm kind of indifferent towards VET. I just think there's a lot better projects on the market. AVAX, I like AVAX. AVAX is on my list. AVAX is on my DCA list. It's not one I'm buying now. The 4 I talked to you about in this project are the 4 that I'm buying now. AVAX is one that's on the list for future DCAs. I really like that as well. All right, so I could answer questions for days. I could literally talk for hours, but I don't want to take up too much of your time. So I'm going to keep the questions, the ones that want to ask more questions, because some of you might want to discuss some of these projects. You guys want to know about UOS, Matic, XYO, I'm seeing Zill, Engine, a lot of these projects. Let's have a chat about them, but let's do it on my Instagram, because we don't want to run this YouTube stream like 2-3 hours. So head over to my Instagram now. There's a link in the description to do so. And I will be answering your questions on an Instagram live instead. So link in the description, we'll hang out. We'll talk about alts. And also, if you follow me on Instagram, I will give you a follow back. I'll be following back like, let's say 20 people. So yeah, head over to my Instagram now. Link in the description. Let's hang out. And if you give me a follow, maybe I'll follow you back. And yeah, we'll just hang out and have a good time. Thank you guys so much for chilling with me today, talking about some of these altcoins. Smash the like button if you enjoyed, of course, and subscribe for future content. I hope you guys enjoyed this video. And yeah, I will see you in the next show. I will be catching you on Instagram in like 30 seconds. So yeah, see you guys soon.